Hello and welcome to San Diego Market Watch, where we bring you timely, accurate information about the San Diego County real estate market on a weekly basis. Today is October 20th, 2022, and we are all looking for the Padres to win tomorrow against Philly. Let's go Padres, on our way to the World Series for the first time in hell, I don't know how long, but a long time. It sure would be great for the city of San Diego to see that happen. Win or lose, the Padres are on a great run, so let's go Padres. All right, with that out of the way, let me also say, if you like this content, please remember to push that subscribe button, hit the bell for notifications when we post a new video, like, comment, and share our videos as well. We have a huge goal to get new subscribers, lots of new subscribers by the end of 2022, and with your help, we will get there. So let's jump right into it. The number of homes for sale in San Diego County has remained relatively flat for the past month. It was much higher back in July, of course, as we've talked about, and then came down all summer long and has been trending down and has now found what I call sort of a floor here around 4,200 units. And that is basically a function of the number of homes that are selling, expiring, canceling, and or new listings coming in. And those are on the way down as well, however, have been very steady for the past couple of months here. We really had a lot of new listings early in the summer, and then they went sharply down, a little back up, sharply down again, and have just been bouncing around this 450 to 590 new listings every week for the past few months. And we had a little bit of a sharp downturn last week. So we'll see as we head into the holiday season, although I would expect this number to continue to decline at least slightly for the rest of the year. I really don't see it going back up too much, which will keep the number of homes for sale relatively low. At the same time, closed sales and pending sales both have been overall steady, but in a downward trend. I will say there is definitely downward pressure on pending sales, and by extension, closed sales as a lagging indicator of pendings. So, we are in a fairly soft market here, and prices have come down fairly dramatically. If you want to look at the peak of pricing, earlier this year in April or so, which is where I believe things really peaked out. When we look back at this market cycle a year or two from now, I think we're going to look at April, May of 2022 as the absolute peak of housing prices I think that's going to set the high water mark for probably the next 4 or 5 years. And, I have no crystal ball. However, I've seen market cycles before, and I don't see prices bouncing back up to those dizzying highs for at least a couple of years, if not longer. So that's what's happening with the closed, pending, new listings, and homes for sale. Let's take a look at everybody's least favorite topic right now, interest rates. Those have been skyrocketing. This is what home prices looked like earlier this year, right? They were going up at an unsustainable rate. Therefore, lots of inflation. Housing is a big part of the consumer price index, a big part of inflation. And the Federal Reserve said we've got to raise the prime lending rate, the rate at which banks are charging each other to loan money, and therefore by extension mortgage lenders have to make money on the money that they're borrowing, so they have to raise rates. And now we are up at 6.94 was the Freddie Mac average for the last week, and that is not good given the median price in San Diego County in the high 800s. That means that, between the middle of May, let's call it, and now, the rate has gone up so much that the payment on a median house is, I would say, around $800 to $900 higher, maybe a little less, right around $800 higher than than it would have been at the rate back in May. So what does that do to prices? It forces them down. So the Fed action actually having the desired effect, although a painful effect, on the real estate market and the San Diego market, our particular area of concern here. So the 15-year fixed above 6.23. So, if you can qualify for a 15-year arm or a 15-year term, the rate is better, but not all that much better. And the most popular option right now, unless the seller's going to be buying down the rate for you, which I'll talk about in a second, most popular option right now is going to be this 5-1 arm, the 7-1 arm, the 10-1 arm. That rate is 5.71 on average for the past week, and that still isn't that great, really, given where median prices are and the fact that incomes haven't jumped up as much as rates and prices have. So this isn't a good situation, really, for the market. It's squeezed a lot of buyers out. It has dashed a lot of sellers' dreams of cashing in on massive home equity. Now they're only cashing in on some home equity. So it's really hard when you have an asset that you thought was performing very well, and then overnight almost it seems like a lot of that unrealized gain has evaporated. But that's what happens if you think of housing as an investment vehicle. Stocks do this. They go up and down. There are fluctuations, on a daily, weekly, monthly basis. The real estate market does the same thing, only it takes a lot longer to come back once it goes down. And, we said it all at the beginning, all this year, I was saying that home prices were rising at an unsustainable rate and that could not continue. And not only did it not continue, but it's pulled back. And I think by the end of, let's go over here to median price, by the end of the year, or possibly, into the first quarter of next year, we are going to start to see that year over year median price become negative. Prices are going down. The trend has been established. We had a little up blip last month, but this is a month-to-month number. And I believe next month we're going to see this line go down again. This is just a function of median price. So that has to do with how many homes were sold, what price points, etc. And for whatever reason, we have a little uptick of 1.6% from August to September. I believe that's sort of again, a blip. I think this line right here represents a lot more what the trend is going to look like. If you look at this graph going back, you will see places where it went up a bit and then went back down. We went up a bit, flattened out, it went up a bit and flattened out, went up a bit, came back down. So it just because we had a little blip here does not mean that's going to continue. So I really do believe we're going to see a continuing decrease in median prices and probably, unfortunately, increases in rates as we head into the new year, because the inflation numbers are still high. They seem to have stalled out a bit, but the Federal Reserve has signaled that they plan to continue with their rate hike program for at least 1 or 2 more meetings, I believe was the last discussion on this. So where does that leave buyers and sellers? Sellers, if you need to sell your home, I would say do it now. I've been saying that all year, and a lot of people were either unable or unwilling to do so earlier this year. And now that, getting squeezed at the end of the year, people are taking prices that are much lower. And for buyers, I would say take advantage of lower prices. If you're going to wait and see and think when the bottom is, that's not a really safe game to play, because rates are also going up and you have to think about your payment in the short term. If you're out there writing offers, just know that prices are down from where they were earlier this year, significantly down, and the sticker price you're getting in at is going to be a good one in the long term. Your rate might stink in the short term, but if you can get the seller to cooperate on a rate buy down, That'll be good for you, whether it's a full rate buy down for the entire term of the loan or whether it's just a 2-1 buy down for 2 years. Whatever it is, whatever you can do to get that rate down, to get your payment down initially, that's good. And then in 2 years or 3 years, when rates come down again, because they will, they always, it cycles. They're not going to keep going up, because if they continue up the way they are now, obviously that's going to spell much bigger problems for the economy, and nobody's going to be able to buy anything. So we do believe rates are going to come down again. In a year or two, they're going to start coming back down. You'll be able to refinance your loan at a lower, more affordable payment, and you're still always going to have been locked in at that initial purchase price. And housing in Southern California is always going to be a hot commodity, so you're going to be just fine in the long term if you're a buyer. So that's it for this week in San Diego real estate. Hope you enjoyed the show. Please tune in tomorrow night for our Friday show. That's always a lot of fun. And I'll be back next week with more neighborhood and overall San Diego real estate information. Have a great weekend, folks.